Do the bulls have the upper hand in this market again, as some are saying? Or is that old cliche, sell in May and go away, your best strategy? Let's ask Josh Brown, Ritholtz Wealth Management co-founder, CEO, and a CNBC contributor. Welcome. It's good to see you.
Hello, Judge.
New month, new hairdo, all is new and fresh.
About that.
So what about this idea? I mean, there were some saying, the bulls have the upper hand.
I agree with the premise, and it's an interesting conversation because if you thought about how we went into the year, what was the big risk? The bond market. Like, how much further is the Fed going to go? That was it. Every day, all day. The bond market right now is a basket case. Consider this. Right now, the highest yield on the curve is the 4-month. It's 5.2% yield right now. The 1-month, for contrast, is at 4.3. This is a huge spread between maturities that are like 3 months apart. It's crazy. The 3-month is yielding 67 basis points more than the 1-month. Well, it's all upside down. So that's the freak show that's going on behind the gym where they smoke and flick cigarettes. The captain of the football team is FANG. These stocks do not look anything like the bond market. The volatility hasn't been there. The confusion isn't there. When they have strong reports or product releases, the stocks go up. When they have negative guidance or weak reports, the stocks go down. It actually makes a lot more sense what's going on with large cap growth, specifically tech, than anything that you're seeing that has to do with central banking or interest rates or anything like that. So I think investors look at that and they say, oh, that's why the Nasdaq's up 21% year to date. And that's why we're looking at all-time highs, 52-week highs at least, in some of the largest companies in the space.
So Brad Gerstner was on, with us on Halftime, and we asked him specifically about mega cap technology, right? He's just had the best quarter he's ever had after a rough prior year because of the exposure to tech. And the idea, can this continue? Let's listen to what Gerstner said about this. We'll kick it on the other side.
I thought we had a regime change at the start of last year. This is no longer about inflation higher and rates higher. This is now about inflation lower, and rates will peak in May or June of this year, and then they'll likely follow as well. We think that setup, coupled with the rationalized multiples of tech stocks, made it a great time to start investing in companies like Meta, like NVIDIA, like Microsoft, that we expected to beat earnings, and they delivered.
They did deliver, obviously, and the implication from Brad was this is the place to be. They got the cash flow, they got the balance sheets, it's where the action is, and it can continue. The multiples are not overstretched in, many of the cases by any means. What do you think?
So you have the Russell 2000 is flat on the year. So it's got to be very frustrating if you've got a broadly diversified portfolio and you decided this was the year to tilt away from large cap growth.
Because many people did.
The torture chamber has started up again. Now you have really good earnings support for the S&P 500, at least for large caps. Consider for Q1 so far, 53% of companies have reported. It's like an 80% beat rate.
I know.
What else do you want out of the S&P to at least justify the start to the year? Now look at Apple, Microsoft. These two stocks combined are 39% of the year-to-date gains for the Nasdaq. So it's really wild, of the S&P 500 rather. It's really wild that we're right back in that place where the rich get richer, the big get bigger. But you're going to have to accept that there are going to be periods of time like this. And now the big question: are we going to do Apple here?
Yeah, okay. I was going to bring it up now that you did.
So look,
does it last? Right? Is Apple the last one to underscore the reason why these stocks have not only gone up, but are going to continue to be the place to be?
So here's the way I would frame it. And I'm long the stock, and I think they're going to have good earnings, and I think the stock will react positively. I could be wrong. That's what I think is going to happen. Here's why this is important, though. The bears will tell you Apple's already up 30% year to date. You got the benefit of good earnings.
That's what they've been saying the whole way, though. You've gotten a year's worth of gains in the mega caps in the first couple months of the year, so there's no way it's going to continue.
Yeah, but let me holler at you, because if you want to frame it year to date, be my guest, but understand Apple is flat year over year. And there are very few annual periods of time where Apple is flat, especially in periods where Apple is executing and hitting on all cylinders. So, yes, you could say year to date it's up a lot. I wouldn't disagree. Of course it is. However, in a year, it really hasn't made any progress. So I'm not sure how much of this year's quote unquote good news priced in.